You're with us here on BTTV. I'm Ava Bakaya. Let's take you through the markets at this hour and record highs yet again. In fact, it's the first time we're seeing past the 62,000 mark. Nifty at 18,575, up about 0.3%, but record levels breached once again on the index. And the sensex as well, 62,556, looking incredibly strong for the day. And if we take a look at the kind of mix of stocks as well, everything from a BPCL, Reliance, it's been looking really good the last few sessions. Hero Motorcorp, Asian Paints, IndusInd Bank, some of the big movers today. Let me welcome Avinash Goretzak, who's joining us on the show. Avinash, markets are showing incredible resilience and optimism, hitting record levels yet again. What, according to you, is the trajectory looking like now? Where do we go from here? How optimistic are you about the kind of returns we can expect going forward?
Yeah, I think Abag, the main reason the markets are jubilant and clearly buoyant is because crude oil prices have corrected sharply. Secondly, I think inflation concerns in the US seems to be peaking out. I think on 14 December when the Fed meets again, there is a very strong possibility that the interest rate hike could get moderated to 50 basis points, and that is definitely a big positive sentimental booster for the markets, not only abroad but even for the Indian markets. Most importantly, I believe that the rally which started in PSU banks, then went to railway infra stocks, is now slowly moving to infrastructure, cement, as well as oil marketing companies. So I think there's a clear buying momentum in all these sectors. My sense is that the coming budget in the month of February is going to be a very important event for the market, considering that it's a budget just before the general elections, and obviously would be a budget where corporates as well as the middle class would be rewarded handsomely. So I think as long as the global liquidity comes in India, most importantly, the dollar index is also showing a weakening trend. So these are all factors which have actually boosted the sentiments in the market, and especially if you see today, the mood in the mid cap stock segment has also been quite encouraging. We are seeing a lot of stocks performing well.
All right, I think we'll go across to Avinash in just a moment there. Let me go across to Tanya as well. She's been tracking some of the buzzers today. Tanya?
Absolutely, Abba. Let's start with Max Financial stock first. So the stock was up over 3% today. So the company has announced that it has received an approval from the IRDAI to purchase the balance 5.17% stake held by Mitsui Sumitomo Company Limited in Max Life Insurance Company. Then shares of MSTC also jumped over 18% amid high volumes. And it is also important to note that the stock is up for the third straight session today. Then shares of Vatek Wabag were also up over 5% today after the company announced that it has signed an agreement with Asian Development Bank for raising 200 crore rupees through unlisted non-convertible debentures. Hero Motorcorp is also in focus today. So the shares were up nearly 4% after the company said that it will raise the prices of its motorcycles and scooters by up to 1,500 rupees with effect from 1st of December 2022 due to inflationary cost pressures. The scrip also gained ahead of its November auto sales data, and the company is likely to report a double-digit volume growth. Shares of Apollo Tires were also up over 5% today. So the brokerage firm UBS expects the stock to hit 355 rupees in a year. And if you compare it with the current stock price, it has an upside potential of 21%. Paytm continues to be in focus again. So the stock was down over 4% in early trade. However, it has recovered and was trading flat in the afternoon session. So RBI has stopped onboarding of online merchants by Paytm payment services. However, the company said that it will not have any material impact on its business. Talking about some other stocks, we have Reliance Industries, Asian Paints, Nestle, Wipro. These shares were among the top gainers. And on the flip side, we have Tata Steel, Bharti Airtel, Hindalco, HDFC Twins that were among the top losers.
All right, thanks for that. I can't take my eyes off Reliance today. Avinash, I want to talk about that first because 3.5% on an RIL, and it's about 2-3 sessions in a row now that we've seen consistent movement on that heavyweight, definitely contributing to the big move today.
Yeah, exactly. I think our 3% move for Reliance is definitely a big move, and I think the markets are now discounting the December 5G rollout from the company. plus Geo Financial Services is also going to be demerged early January. So I think these are two important events which the markets are now factoring in. And obviously, if crude prices do come down, then the gross refining margins for the oil business gets better. So I think net, even at these levels, I would not be surprised that the market could give it a further momentum and we could see, higher levels. My sense is around 27, 2800 looks to be a realistic possibility over the next, say, 6 to 12 months.
Okay, from the PSU banking basket, Avinash, what are some of your preferred picks? Are you bullish there? Do you feel they've now had their run up? Would you take a pause? What's your view?
See, I think PSU banks, I believe in the second half should do significantly better because that's the main earning season for banks. With a credit growth of almost 18% plus, I believe banks like SBI, Canara Bank look well positioned. Even Bank of Baroda look good. So I think, one should use a buy on decline strategy. Stocks have risen pretty fast, but I think even now there's a lot of risk reward left in SBI and Canara Bank. So these could be my preferred picks, and I think you could definitely get a decent risk reward provided you hold on for the next 8 to 12 months going forward.
All right, that's on some of those PSU banks there. What else from the broader markets do you like, Avinash? I'm curious to get some of your favorite picks, which way you're looking at some of the perhaps underdogs or as yet names that still have more potential to run up.
Yeah, I think from the auto component sector, I think Bharat Forge looks to be very well positioned. I think we have been recommending this stock to our clients quite early, and I think with a very strong order book in defense, in auto, as well as now supplying the new attack gun to the army, I would not be surprised that over the next say 12 to 15 months, earnings growth is going to take a very strong jump. Even at the current levels, one could expect a decent 20-22% upside over the next 12 to 15 months. And on the corporate capex cycle side, we continue to be positive on L&T and Cummins. I believe Cummins is going to record a very strong year for the second half also. And I think with a very deleveraged kind of balance sheet and a very healthy order book position, Cummins possibly could also cross about 1500, 1550. So I think L&T, Cummins, and Bharat Forge, this could be a good stock selection even at the current levels for a good risk reward over the next say 12, 15 months.
Here are the names from the broader markets. I mean, look at some of these railway stocks and then auto ancillaries across the board. That particular segment's booming as well. Railway names, engineering, India, a whole bunch of these stocks. What's driving some of these rail stocks, Avinash? We're still a little while away from the budget.
Yeah, I think rail stocks, which directly get benefit are the wagon manufacturers. And I think for the first time after almost 4 to 5 years, the government of India has placed a very big order of 90,000 wagons to most of the players. Companies like Titagar Wagon, Jupiter Wagons, Texmaco Rail. I think these are companies which are going to benefit significantly because it's a supply, driven market. Not many manufacturers here. Stocks like RVNL and Ircon also have moved up significantly because they do a lot of construction EPC work for the railways. So my sense is that if one were to take the next 12, 15 months, despite the run-up seen in railway infra stocks, if one were to invest in these companies, one could expect a decent reward because government is very serious on building the railway infrastructure, the new Vande Mataram trains, the new stations which the government is constructing. All this is going to be meaning that a lot of money is going to be spent on various railway infra kind of activities. So net, the activity in this sector should continue to do good, and I think numbers should follow.
Okay. Fair enough. So that's on some of those rail stocks there. I'm just looking at some of the other movers. Do you feel perhaps this pressure cooling off on crude is going to give a fresh fillip to some of the FMCG companies? We've already seen great performance, but even if there was some kind of concern with regards to input cost pressures, that also now will recede?
I believe, the fourth quarter could be interesting because FMCG as a pack, has underperformed, and I think rural India is slowly gaining up. I think there was a big lull in the rural market demand, and that's the reason we saw a very muted Q2 performance from most of the FMCG measures. Two things benefit FMCG players. One is obviously the palm oil prices have come off, and volume growth could be significantly better in the fourth quarter. So consumption as a theme should definitely benefit some of the large FMCG players like Lever, Dabur, or for that reason Godrej Consumer Products. And prices are fairly reasonably attractive considering that earnings growth has not been great for the first half. So definitely one can look forward to a reasonable risk reward in the coming budget because budget also is obviously going to give them a fillip. So net, I think the sector outlook looks positive, but with a slightly medium term view.
All right, so that's on some of those FMCG names there as well. Avinash, what's not looking good to you right now? We're seeing metals see quite a bit of a cool off coming in the last few weeks for obvious reasons. Is that a pocket you'd like to avoid? Do you see any turnaround when it comes to that pocket of the market?
Yeah, I think Abag, I think metals definitely would take a little more time because China as a player has not yet entered the metal market in a big way. China decides the prices, so to that extent, metal prices are going to remain volatile or on the on the downside. But whichever sector is export facing and which is largely exporting to the US or the European markets, I think at this point of time, looking at the kind of headwinds in US and Europe, Europe is already facing an energy crisis and it's getting very difficult for companies to operate there. So I think Indian companies which are directly focusing on these markets are definitely avoidable. So it's better to focus on domestic themes where the trajectory for growth is much better than focusing on Europe or export. So that would be my avoidable list for the time being.
Okay, avoid there. What about auto with Hero in the news today? That stock's moving higher. Two-wheelers in particular, do you see any potential there? Because they've still been lagging in the overall segment.
Yeah, I think Abha, if you look at the overall performance of two-wheelers vis-a-vis the commercial vehicles and the passenger cars, they have underperformed. But I think, as I mentioned to you, that the second half is going to be interesting. We expect good jump up in the rural demand, and Hero Motor, has taken a second price increase. They have a large exposure to the rural markets. So I think Bajaj Auto, Hero Motor Corp could definitely be looked upon because valuations are in your favor. Unfortunately, on the auto side, that is four-wheeler and the commercial vehicle side, valuations are fair to expensive. So this is a space where one can start nibbling in a smaller quantity because hopefully the October to December, the festival quarter should be a lot better. And January onwards, I think the traction should continue. So definitely Hero Motor Corp and Bajaj Auto look interesting.
Okay, that's interesting. Two-wheelers coming back to the fore. TVS is also up about 2% today. So a little bit of a spin coming in there on some of those names. Sterlite's up about 2% in today. Sterlite Tech is also looking good in today's session. Other than that, a smattering of stocks across sectors. What about pharma, Avinash? What's your take on pharma? Would you go for maybe something like a Divi's Lab, or would you stick with a Sun Pharma, or would you give the sector a miss, considering that there are so many other options out there?
I think within the pharma pack, we would be more, comfortable avoiding companies which directly export to the European or the US markets. I think larger players like Sun Pharma you mentioned definitely have done pretty well because their specialty business has taken off. I think the other companies, typically the CRAMS players, especially Syngene, looks pretty interesting. So I would believe that this is one space where there's little less competition and the growth trajectory is also pretty strong. At this point of time, I would avoid Divi's because Divi's has shown a very strong degrowth in their margins, and this is unlikely to change at least for the next couple of quarters. Although the company looks good, but I think near-term headwinds are quite challenging. So I think Sun Pharma or typically a Syngene could be in my buy list. But yes, pharma is definitely a pack which would take some time to recover. So these two stocks would be my preferable bets.
All right, so there you have it. That's the take on pharma. Avinash, what do you feel is going to be the nature of the market? I know I'm asking you the impossible, but if you were to assess, given the current factors at play, we are counting down to budget now. Got about 2 months to go. What do you think the market's really going to be watching out for now, with earnings season well behind us as we head in towards the end of the year and count down to budget?
I think, see, one thing which is very evident is that the markets have climbed the wall of worry very comfortably. And despite underperformance seen in the global markets, the Hang Seng is down by 15%. The US markets are down by almost 10-12%. Indian markets have outperformed. And most importantly, the most important thing which markets would be looking at the budget is typically what kind of growth is envisaged for the manufacturing sector, for the capital goods sector, how much money is spent on infrastructure sector. But the key point which all market men would also look at is on the inflation side, what is the government's opinion assessment, and globally how inflation pans out. Hopefully, if the inflation globally starts speaking out, that could be a good kind of sentiment booster for the Indian markets also. So I think inflation is going to be the keyword, and plus global crude prices. If prices come down to 75, 80 and stick there for a long time, that would mean a lot kind of benefit for the Indian economy, where almost 90% of the crude is imported. So I think crude as well as inflation, and obviously the government's focus on infra, I think that would be the key data points to watch out.
Okay, government's focus on infra, and we'll talk about some of those cyclical plays as well, and perhaps what could look good there. That's another interesting segment of the market. But I'm just going to take a look at the gainers once again. We're about 10 minutes to go for close, and it's just been a fantastic day with these new records being hit. Sensex up close to 200 points, Nifty up close to 50 points, and across the board gains coming in on some of those major headline stocks, of course, like RIL, but also take a look at a BPCL up 5%. Hero's looking good today, 2.5% there on a Hero, and we've got consumer discretionary now coming back into the play with crude oil prices easing off, like Avinash was talking about. Strides Pharma is trending up about 5%, just showing you the kind of gains. Emami's up about 3% coming in today. Gland Pharma is up about 3% as well. So a whole host of these names. Tube Investments, for example, is up 6 to 7% in today's session. So that gives you the kind of momentum that we're seeing. Welspun Corp is up 3.5–4% as well in today's trade. So from the infra pack then, Avinash, let's get some stories there as well, and what do you feel is looking exciting? Because everyone's been talking about this big comeback on the back of India's growth story and the kind of cyclical movement we're going to see going forward.
Yeah, I think when you talk about infra, Ava, I think you should not ignore cement. And I think cement is a sector which underperformed in the first half. My sense is that over the next 6 to 12 months, cement could be a very outperformed kind of sector. And, already cement prices have been hiked by about, 10 to 20 rupees per bag. So that would definitely benefit first all the pan-India players like an Ultratech or typically, something like an ACC. My sense is even the smaller players like Heidelberg Cement or maybe a Ramco Cement in South should benefit. So cement is one sector which is going to be benefited by the infrastructure boom, and obviously capital goods and infra companies like Larsen and Toubro still look pretty interesting. The order book is strong, execution is fine, and I think probably all the construction and the EPC companies, because these are companies which are possibly going to be benefiting significantly by the government's budget in the month of February, because obviously government would like to push infrastructure just before the election year. So these are all typical companies and sectors which I think should do well. So typically I think one should use some resources to deploy in cement, construction, EPC as well as capital goods.
All right. In fact, mixed views coming on cement, Avinash. Some saying that a price hike is imminent, there might be margin pressure. Others saying that there's enough capex plan in the sector to really balance that out, and that will still continue to see a fair amount of growth on the back of that. You of course just mentioned how positive you are on cement, but do you see any reason for concern given some of these mixed reports?
I think most importantly, with crude prices coming off, petcoke prices, also correcting. My sense is that the tailwinds for growth for the cement sector seem to be pretty positive. But yes, in case crude oil prices go up, power costs go up, then it's going to be a bit difficult for cement companies to pass through. A decent amount of supply is expected in 23-24. So I think regional wise, I would believe the central India and the North India kind of players would benefit more. Cement is obviously a locational kind of sector where you got to look at the location and the demand supply mechanics. So definitely, I think one has to be very selective here, Ava. Across the board, maybe we may not get cement stocks, but I think the larger ones would definitely benefit.
All right, fair enough. So stick to the larger ones there. Now, the IPO of Dharmaj Corp was opened for public subscription today, and it's a 3-day issue concluding on Wednesday. Price band 216 to 237 there. And it consists of a fresh issue of equity shares worth up to 216 crores, an offer for sale of up to 14.83 lakh equity shares by existing shareholders. Let's also focus on some of the highlights coming in from the S&P Global Ratings report that was released over the weekend. The rating agency has forecasted downwards by 30 basis points to 7% for FY23. The FY24 projections have also seen a 50 basis point downtick to 6%. Earlier this month, Goldman had gone ahead and slashed their forecast from an earlier 6.9 to a 5.9%, and Moody's had pegged India's growth at 4.8%. That's even lower. S&P also believes that a recovery in domestic demand should help those growth figures going forward. Avinash, while these projections on growth will of course continue to come in, I want to ask you from a retail investor's point of view, they're more interested in what range the market's going to trade at. So considering we're already at these kind of record levels, do you see us perhaps moving in a sideways range over the next few months? There seems to be enough of a cushion in the market right now to avoid any kind of a major meltdown or fall. What's your thought on this?
I think one noteworthy part about today's trading session is that the markets have actually continued the run ever since the first half. So normally what happens is in the second half, you see little bit of profit booking at high level. That has not happened. So I think as long as the markets maintain 18,500 odd levels, I would believe the buying, sentiment and buoyancy would continue. I think the month of December would be a little muted month because post 15th December you find most of the FIs going out. But I think definitely in the month of January we could see a little bit of an upside rally again on pre-budget expectations. So I think investors should not worry. They should look at specific stocks and look at looking at good companies, good earnings growth kind of companies where numbers are going to get better. So I think broadly the market would be in a very narrow range, but yes, stock specific activity would continue.
Avinash Gaur, like always, wonderful chatting with you. And thank you so much for joining us on the show today. And look forward to chatting with you again soon. Very clear view coming in there from Avinash on the momentum in the market, the kind of upside we're likely to see, and really which factors to focus on going forward, which pockets of the market to focus on as well. Nifty today, 18,548. We're up a nice 0.2%, but it's really the fact that we're trading at those record highs once again. Sensex at 62464, nicely well above the 62,000 mark. We've seen crude oil prices recede. We've seen a lot of action across the board in the broader markets as well on a variety of stocks. I'm going to bring up some of the gainers again for you as we wind down today. Reliance was clearly the star. 3% move on an RIL is not a small thing. But look at BPCL Go, that one's also up about 5%. Hero Motors up about 2.5% there, so that's Hero for you. Other than that, Tata Consumer, SPI Life, which has been a steady mover, as has a Nestle. Some of these names as well standing out in today's trade. On the downside, and there are always a few losers as well, so we'll pull up some of those for you. From today's session, we had a couple of stocks like from the metals pack, Hindalco, JSW Steel, Apollo Hospitals was also trending lower. Metals definitely tanked in today's, not tanked, but were, the outliers in today's session. Bharti Airtel cooling off there. HDFC Bank has been cooling off as well. Some of the other names there. So on the gainer side, PSU Banks, Auto, FMCG, the Nifty Bank, energy stocks, really that's where we saw some amount of action. On the downside, it would be, I guess, IT, pharma, real estate that didn't participate too much in today's session. PSU banks, of course, have been a clear center of focus, and that pocket continued to gain. Broader markets as well, we saw plenty of action. I could take you through some of those stocks that we saw movement in today. And we saw quite a bit of action coming in. So, for example, HPCL was up 5%, FACT was up 5%, Triveni Engineering, Motherson Wiring, Delta Corp, Alok Industries, for instance, Suzlon Energy, Cochin Shipyard. All of these stocks were up 4 to 5%. Dilip Bilcon, Godrej Industries, GE Shipping, IDBI Bank, another one there. So a whole host of these that we're seeing a fair amount of move. Mascot Dock, that was another one. Gland Pharma, Hikar Logistics, Kaplan Point Labs, Intellect Design was another one, 3% higher there. So as with the Varun Beverages, Indiabulls Real Estate, and Max Financial was also seeing some bit of news coming in. Vinati Organics, Kansai Nerolac, and the list goes on. So enough action there in the broader markets and certain themes that we've also been seeing play out. Railway stocks, some of the auto ancillaries, shipping stocks, fertilizer names, consumption. So a lot of these themes also continue to play out in the broader markets as well. Overall, a pretty good day in trade, and it looks like markets are continuing to be resilient and trending steady at these levels. We'll wait and see how things progress from here. But for now, that's all from us. The IPO today opened for subscription and was fully subscribed on day one. So that's the update there on Dharmaj. And in terms of course, some of the other cues we're watching out for, well, while growth figures continue to come in with muted outlook going forward, markets definitely seem to have a mind of their own. We leave it there this afternoon. Thanks so much for watching.